Hello, friends. How are you all today? We wish that this new year 2023 brings new happiness, new learnings, and new achievements to your life. Friends, basis my experience in past 7+ years, I've always felt that before undertaking a cross-border transaction, the clients, as also their CFOs or local consultants, do miss out on evaluating certain critical aspects on the international tax and regulatory front. Hence, with the purpose to spread knowledge and awareness within you, we are glad to share our first video of 2023, wherein we are quickly discussing certain key aspects which should be evaluated before undertaking cross-border transactions. Hope you like this video and learn something out of the same. We would be pleased to receive feedback on the same. So guys, before getting into the list of key aspects, it is important that we understand what is a cross-border transaction and why it is important to understand the key tax and regulatory aspects which revolves around the said transaction. So, friends, just to say that there is no legal definition of a cross-border transaction. However, as you can understand, it's basically a transaction between a resident of one country with a resident of the other country. There could be more parties under the same parties residing in the other countries as well. Now, as you can see, I have also listed certain examples here of cross-border transactions, such as investment in subsidiary or joint ventures, cross-border mergers and demerger, transfer of shares or intangibles, providing of loans, rendering of services, as also making of royalty payments. But apart from that, it is also important to note that even if there is a reorganization or restructuring of a multinational business, then also the same is considered as a transaction and hence would require a due evaluation. Now, coming to our why, that is why the evaluation is more important, because for obvious reasons that we could be an expert of law or legislations of one country, but we cannot be an expert of the law and the second country. Further, any non-compliance or any violation of provision could lead to huge penalties and may also delay your transaction. Hence, it is very important that we take in account all the factors affecting the transaction as it and its outcome. And that's where we always seek that what should be the process which we need to follow to ensure that a cross-border transaction is duly analyzed. Friends, somewhere I have seen that considering the commercial angle, the client would always try to skip this process to complete the transaction at the earliest. Hence, as a CFO of your company or a consultant to the client, we should always ensure that following processes are quickly followed before undertaking the transaction. So I would be quickly discussing the same. First of all, please note down the relevant aspects which may be involved in your transaction or the aspects which might affect the same. Then you should always estimate the cost involved in the transaction. Just to give an example, when a client is making investments, estimate the profit repatriation cost under various structures, or probably if in a service transaction whether the withholding tax is involved or not. In case if that is involved, whether the foreign tax credit shall be available or not. Then you should always understand the exposures which could be involved, such as creation of permanent establishment on account of rendering any services or violation of any debt equity ratio, etc. Then, after, in case you feel that a formal advisory from an external expert is required to vet the positions, or you need any support in preparing or reviewing of any documentation such as agreements or any other documents, please do ensure that you have a formal opinion in the hand to ensure that the estimations which you have made are in line or are to be modified basis the advisory received. Please remember that the cost of non-compliance would be always greater than a consultant's fees. Finally, for executing the bigger transaction, please have a step plan which has been vetted by the experts of both the countries. This shall surely avoid any delays and the management shall understand the process which ultimately reduces the exposure of any non-compliance. So guys, moving ahead, just to provide you an overview, we have discussed here the key international tax aspects which are required to be considered before undertaking a cross-border transaction. As you can see, the first and the most important part is to analyze the relevant provisions of the DTAA, that is Double Taxation Avoidance Agreements. The first point, post gathering of entire background of transaction, is to always check the coverage of transaction under the relevant DTAA. Further, it is important to note here that along with evaluating of DTAA, as most of countries including India are signatory to the multilateral convention to implement tax treaty related measures under OECD's BEPS project, that is the MLI, the DTAs are required to be read in the context of modifications being made under the DTAA post implementation of MLI by the respective country. Apart from the same, we have also specifically tried to cover certain transaction wise aspects as well, which might be prevalent while undertaking certain transactions. For examples, the key aspect to be evaluated in case of any service transaction would be to evaluate whether there is a creation of permanent establishment or not, or whether the transaction can be construed as a technical or professional service or not. Further, when any investment or funding transaction is being made, then it is important to evaluate the local tax provisions along with admissibility of foreign tax credit on taxes withheld in other jurisdiction. Further, it is also important that the required documentation to claim the foreign tax credit is also available. Also, when a transaction is happening between two related parties or associated enterprises, the transfer pricing analysis should be duly undertaken to avoid any adjustments in the future. Apart from the above, certain relevant areas under OECD's best products such as thin cap regulations, substance over form, significant digital presence, etc. should also be well consulted with international tax expert if the same are relevant in the proposed cross-border transaction. Finally, apart from international tax aspects as discussed in our earlier slide, regulatory aspects such as forex regulations, if any prevailing in any or both of the jurisdictions, should be referred to. Apart from that, there could be certain transactions such as investments or disinvestments, which would require an analysis from the perspective of prevailing corporate laws in the respective jurisdiction as well. This was all. Hope you liked this informative audio deck. We will keep coming with such informative videos in 2023. Thank you for listening to this.